Good morning, this is Connor from 0DTE Traders here to present our market minute for September 24th, 2024. It is 10:15 and the SPX is trading lower, down about 0.2%, 257.10. It is bearish to neutral out here this morning. We had selling pressure kick in right from the open, essentially at the all-time high, 57.33, 57.35. That is most certainly bearish price action, move down, a break of multi-day structure here, short-term upsloping trend line. Now bouncing off 5,700, which is pretty critical support, more or less the low from yesterday. So a break would imply an outside day with the possibility of continuation to the next major support zone of 56.75, 56.70, which is our flip. A break of that flip would be a risk-off indication where we would transition from positive to negative gamma. And at that point, we would anticipate higher volatility, both implied and realized. Now, we shorted the market here right from the open. A matter of fact, from the pre-market, selling the big 57.50 handle short calls. That has played out quite well. Already out of that trade. I'm not yet looking for a dip buy. We are at that 5-minute cycle low. Not quite 15-minute cycle low, so I don't really want to rush into a trade here. I would look for perhaps a turning point midday. Now, if we do bounce and hold, so be it. I'm not going to chase, but looking for perhaps kind of a midday dip buy. I think it's just slightly too early to buy the market at this point. Now, something we want to talk about is that 57.50 handle. Which is quite significant here in terms of positioning. So let's go over to our gamma charts and we'll touch on that. Starting from the top, the gamma index is positive, 840 million notional, trading above the flip of 56.70. So you can see that is the transition. All strikes above positive, which is supportive for the market price. Most strikes below negative, destabilizing for the market price. 5,700 is that critical support. A break, the market will lose quite a bit of positive gamma. If that does hold, well, we got major resistance on the upside, 57.50. This is enormous in terms of call gamma, so it is classified as our call wall. It is also the absolute gamma strike, so the strike with the highest total gamma, calls plus puts, meaning we could see pinning behavior going into month end. Now, why do we see such significant gamma at that strike at this point in the option expiration cycle? And this is to do with the JP Morgan put caller trade. So JP Morgan is short 57.50 on the September 30th expiration. Total call open interest is 45.6. So this is why we're seeing substantial gamma there. Now, how to play this or how this may influence the price action is it's very similar to the OPEX pin, and the market could act as a bit of a magnet. So pinning kind of mean reversion plays around 57.50 could be attractive opportunities going in to that option expiration. Now, clearly we haven't even tested this level yet, so we got to break all-time high for that to be in play. Also, something to note here is if we break below 5,700, a lot of that gamma is going to get reduced and will become less influential, although this means we could potentially see squeezes on market dip. So if we do get decent pullbacks, we could see sharp upside moves as that gamma rebuilds. So really, 57.50 is likely going to remain significant into month end and should present several opportunities. Again, this morning we shorted this strike, short calls, which has played out quite well. Lastly, I just want to touch on monthly, quarterly option expiration. Now, of course, we just had the big triple witching last Friday, and the market exhibited textbook price action going into that event, a positive to flat trend, volatility compressed, and the SPX pinned that big gamma strike, 57.50, 4 a.m. and p.m. settlement. Now, what we tend to see post-option expiration of a call-weighted cycle. So first off, we classify option expiration into two categories. We have call-weighted, also known as positive gamma, meaning there are more calls expiring than puts. We have a put-weighted cycle, also known as negative gamma, and this is where more puts are expiring than calls. Now, when we have a call-weighted expiration, we tend to see choppy action or some market weakness the week following option expiration. So that is this week. We can see that just if we look at recent option expirations, flat to down, flat to down, kind of flat here, a bit of a positive drift. And as of right now, a little bit flat. Starting to see some weakness here today. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.